I'm Donna Rayburn. I am a certified business intermediary, business broker, and I am a CPA in the Tampa Bay area. I've been practicing for many years in this area, helping sellers get their business ready to put on the market, and I've helped buyers understand the financials of the prospective company that they're looking to buy. So now I can do the whole transaction from start to finish. So I can get the business ready to sell. We can sell it. I can find buyers for the business. So that is what I love to do, and that's what I've been doing for the last several years.
Hi, I'm Ann Griffith, a business broker with the Exit Strategy Company. With a background in finance and sales, I help business owners sell their companies the right way, confidentially for top value and with the right buyer. From start to finish, I make the process simple so you can focus on your next chapter. It is very essential for a business owner to be working with a tax accountant and someone to be really that professional looking over their numbers. What would you say is things that business owners should be discussing with their tax accountant surrounding their future goals if they are looking to sell down the road?
Yeah, that is such a great question because most business owners don't have conversations with their tax person. It's like, here's my stuff. Oh, here's your tax return. File it. You owe this much, and that's kind of it. It's so important that business owners have conversations with their tax accountant and tell them what their goals are. I want most of the time I don't want to pay a lot of taxes. That's my goal. Okay, so the tax accountant gets aggressive in the deductions and they don't pay a lot of sales of taxes, income taxes. Great. Well, at least 3 years before you want to sell your business, you need to have the discussion with your tax accountant. Hey, I'm getting ready to sell. That means I want to show a lot of income. I want to pay a lot of taxes, and I want my business value to be higher. So you really have to have that conversation with your tax accountant so that they don't, take all of your personal expenses and then run them through, and you're not paying a lot of taxes, but guess what? You're also not showing that you're making very much money either. And so that's not great for a buyer. So I think that business owners should meet with their accountant at least once a year. And especially, like October, November, you should be meeting with them just to kind of have them run a tax planner and see how you're going to do that year. And then you can make decisions for December on, oh, I better work really hard, or, whatever it is that you need to do, but make some changes if you need to. So it's important for business owners to meet with their tax accountant and have that relationship where they know, how to help you best.
Yeah, so it sounds like at least once a year, but if you're doing it more than that or even quarterly, that's even better, right?
Definitely to review the financial statements. So many business owners don't really understand and they think that it's the accountant's responsibility. It's not. It's the business owner's responsibility for their financial statements.
And why else would you say that it's, very important to have your taxes in order, and what what would a business owner want to be showing?
Um, a lender is not going to be very confident in loaning somebody money if the business doesn't have reliable taxes. So I think that's really important that it's not just for the buyer, but a lender has to lend money to your buyer. So you really have to have things in good order. Your financial statements should match your tax returns. You should pay attention to what those numbers are and know what they mean. Um, that's why it's important to have conversations with your tax accountants so that they can explain things if you don't understand them.
For sure. And I know we've been talking about personal expenses as it relates to business owners. Can you walk us through just how that would affect a business owner later down the road, if they were to run, lots of personal expenses or even just some through their business?
Yeah, because I have clients like that, and it's really frustrated that they decide this year that they want to sell the business, but they haven't been planning properly. So yeah, they're using their business as a bank. It makes it so difficult to sell and to explain to a buyer and to a lender what the add backs are and these personal expenses. You know, I have a client that runs all of her Amazon charges for her home and her family through the business. So their cost of goods sold is is higher than their industry average because of that. So having to explain that just doesn't make the seller or the way they've run their business look very professional. So it's so important to show that you're making a lot of money and you're paying a lot of taxes. That is really an indication of a strong business and much easier to sell and not a lot of negotiations. I think you can get a better price that way too, no question.
Yeah, and I feel like it can be somewhat difficult to, or it's not as common to see business owners documenting or keeping receipts of all of those specific personal expenses that affect their costs of goods sold. So that's another thing to definitely keep in mind. And so, what would you say are some best practices for keeping your accounting records and finances organized for your business?
So you know, hire a tax accountant to keep your records accurate. I know a lot of business owners want to do it themselves, which is fine, but you should at least have an accountant do it's called a like a compilation where they just put all the financials together. So if a buyer and their lender is requesting financial statements, they sure do have more confidence if they come from an accounting firm versus your QuickBooks account. So it really helps to spend the money. It's, I don't know what it is, maybe a couple $1,000s a year, so worth that amount to have them in good order when you're getting ready to sell and a couple years out if possible. So for tech, you know, for if you want to save on your personal, like if you want to run your personal expenses through, yeah, you may save 20-25% on taxes, like your whatever your income tax rate is, but that amount of money is going to cost you 2 to 4 times that in the reduction in the amount of your sales price. So, you know, business owners share with each other like, oh, run everything through, run everything through. But if you really look at the numbers, they're not even close. You know, a 25% tax savings is nothing compared to a 3 times multiple that you can sell your business for later. So you really got to look at the big picture when you want to sell your business.
Yeah, and so it sounds like sometimes it can be better to just pay the taxes now and get the payoff later on.
And that's a tough one because I have a client who hates it. He's doing so well, and I am forcing him to keep showing that he's making a lot of money and pay those taxes, and he hates it. I'm like, I'm telling you, it's going to benefit you in the next 2 years because he's already been doing it for a year. You're going to be so happy that you did this and for when you sell the business and show how much money the company is really making. So it's tough.
And when you're looking for a good accountant, what are some questions or things to look out for to vet, and compare the good ones versus the bad ones, so to speak?
Yeah, really asking if they'll review your financials with you, even if it's just quarterly, you know, if they'll just review them and help you understand what the financial statements mean. What is a balance sheet? What does it mean? What is an income statement? What does it tell somebody when they look at it? And then, yeah, in October, November, you ask them if they'll run a tax planner for you. Like they have your financials for that year, they can put it in and it'll show you, like if you were doing your tax return right then, this is how much you would owe. And that helps you make better decisions through the rest of the year.
Great. And I know we're always happy at the Exit Strategy Company to recommend some good accountants as well if people are looking for recommendations.
Yeah, it's kind of a lot of pressure. I feel like people think just because I'm a CPA, I should know a lot of referral sources, but I do.